Anywho, so long story short, we do have similar backgrounds. My interest in real estate started when I was 23, 24, bought a condo. And once you do that, fresh out of college, it's kind of like, all right, I need my own space and so forth, bought a condo and learned how to be responsible through that process. So coming out of mom's house into your own place, you're responsible for the mortgage, the association fees, etc. And I had decent credit, but then all these credit cards started coming. It's like, man, it's like liquid gold. So then you start using it for restaurants and gas and everything but an emergency. So then the credit obviously went tanked, and then I was in like a lot of serious debt, trying to dig my way out of it slowly. And that's when I really start learning some financial principles. Got married. The husband was like, yep, nope, don't need those credit cards, don't need this. It was like, we need to be principled financially, have savings. And it was a struggle. I'm telling you, that was a serious struggle. So I'm thankful for the experience, but at the same time, I learned some principles about what's important and what's not important and how to use your credit cards. So a lot of that happens when you're in college, when you get a lot of credit cards. So this session with Efrem is very important because some of you may have been in that same scenario. So as I got married and then my credit started going back up, I learned a principal lesson there about the misuse of credit cards and being financially stable, having a savings plan and a backup. And so that kind of segues into kind of what he's going to talk about today and how we can help you to get to that financial situation. Then you can purchase your next property or first property. So, all right, you're ready.
Hey, can you hear me okay? We must have a little bit
Yep,
of
I can
a
hear you.
we must have a little bit of delay here on my side, but no, I appreciate you putting this together and having me on to talk a little bit about this. And our backgrounds are pretty similar because I'm from Chicago too, originally Wild Hunnets. Bought my first home when I was about 24, 25. It was a town home. Had no idea what I was doing. So, credit was just kind of, yeah, it's kind of meh in the meh category. But yeah, so it is. I'm just grateful
Mm-hmm.
to be able to talk about a little bit of this stuff. So to help more people get out of that meh category.
Right,
So this is good.
exactly.
So I'd love to share, if I can here, I could talk about a couple of things that people can start doing that I wish I would have known before I bought my first home. So I'd love to share a little bit of that if I can, if that's all right. Give me a little quick
Yep.
sip here though.
All right. What you got
So
today?
one of
Tea,
the one of
coffee?
I'm sipping on the chrysanthemum tea here. So if for
Oh,
anybody
okay.
that if they're not up on this chrysanthemum, I'm telling you, you might think, oh man, I don't want to drink a flower. That's dumb. Tell you, get the chrysanthemum. It's these little powder things you
Okay.
put in there. Get the honey, lemon, boom. It's all world.
All
so,
right.
but the first thing I would tell somebody to do, before you get ready to look at buying your home and look at, or maybe your second property, or whatever it is, you got to have a good idea of what's your why. Why are you buying the property? I always tell people that you should really ask yourself why before you ask yourself how. A lot of
Mm-hmm.
people already immediately jump to the how do I do this? How do I do that? No, 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 no. Slow your roll. Why do you want to do this? Are you getting a home because you're expecting children and you need to have a larger space? Are you first time home buyer? How much can you afford? Are you trying to buy a property because you may eventually want to turn it into a rental? How long are you going to live, in the area? Are you planning on moving to take another job or do something different? So your why should motivate you very strongly. So real quick, for me, when I first bought my first home, it was a townhome, and I bought it mostly because I didn't want to have to deal with the stressors of having a bigger home or taking care of grass or all this other stuff because I never had a home before, so I didn't want to do any of that stuff.
Mm-hmm.
But I also knew when I bought it that I wanted to eventually turn it into a rental property. So I bought way less than what I could actually afford at that time in order to kind of
Awesome.
scatter step my way up. So that's why I say your why is so important, because if you just go in and just start, getting on the internet like most people do, you start looking at the different listings and You start seeing this out. Ooh, that looks good. That looks good. That looks good. And
Mm-hmm.
then you got to start getting your mind fixated on this one idea, and then you stop being open to other
Mm-hmm.
ideas. So understand your why, break
Right.
it down. That's going to be key, man. And then make sure you're on the same page, especially if you're married with your spouses, because your idea might be different.
Absolutely.
She might be sitting up here watching a bunch of episodes of
Yes.
Tiny House, thinking we got to go get a tiny house, and you over here thinking you want to,
Mm-hmm.
Rick Ross it in the mansion or something. So you got to make sure you're on the same
Right.
page with that stuff. The second thing I would tell somebody to do is about your budget, right? So once you get your
Mm-hmm.
why, that's the next thing you want to do. Is It's the B word. Nobody likes to talk about it, but you got to get your budget right.
Right.
Get your budget right. And here's the reason why. You want to have a very clear understanding of exactly how much you can actually afford. Where's your spending going? Because I see so many people,
Mm-hmm.
they'll get their heart set on, oh, I want this house, I want this house, and they really can't afford that house. It's really pushing them to the
Right.
extreme. And your house should really be a blessing. It shouldn't be a curse. So you shouldn't put yourself in a position that, oh no, I got this house, and now what was meant to be a blessing is now turned into something that ends up putting me into financial ruin, right? So if you have
Right.
not utilized a budget before, I'm gonna get my hand clap. If you have not utilized a budget before, you need to use a budget. Because here's the benefits it's gonna give you. One is gonna show you places where you could be saving money. It's gonna show you places of gaps that you may have, because maybe you need to be putting more in investing or more here or there. It's gonna reveal those gaps to you, and ultimately, it should show you how much house you can actually afford. Now, kind of as a rule of thumb, I usually tell people, if
Mm-hmm.
you're looking at a home or your next purchase, if it's a home that's not an investment property, right, you really want to look at no more than about 28%. 30% is pushing it, but about 28% to 30% of your gross income for all your housing expenses. Now, how are you going to know that unless you're doing your budget and you know exactly how much you have to be set aside? So do your budget. I cannot emphasize that enough. If people need help with that, I help people with that
Yes.
kind of stuff all the time. That's not a problem.
Mm-hmm.
And I know that's unpopular though. People hate hearing the B word. Don't
Yeah.
stress out about that, right? It's something where you can do a very simple budget. There's concepts called the zero base budget, percentage budgeting. You can use programs like Mint. The idea is you need to be able to control the flow of the money that's coming into your life versus having the flow of money control you. That's the whole point of the
Exactly.
budget. That's all it is. And
Yep.
I always say this: a budget is nothing more than a plan of action expressed in numbers. That's all
I
it
was
is.
just thinking
It's
that.
you
Yep.
planning out. So you feel me? That's all it is. It's just a plan of a plan of action that you're expressing in
Mm-hmm.
numbers. That's all a budget is. Okay. So
Yep.
once we get that fear out of doing the budget, then I think people can relate a little bit more for it. But you got to get an idea. So once you do the budget, also you got to start looking at your foundation, right? So the budget is kind
Mm-hmm.
of the first layer of your foundation. I wish I had known this. Oh my God, I wish I had known this when I bought my first house.
Man,
I didn't know
me
this stuff.
too. Preach to the
I didn't know
choir.
this stuff. I didn't know this stuff. But your foundation, right? So what's your foundation? You A lot of people have these super big dreams financially, what they want to do, and they're trying to build these skyscraper dreams on an outhouse foundation. You can't do
Mm-hmm.
that. You got to have a solid
Mm-hmm.
foundation. So foundation, do you have your budget in place? Do you have some emergency money in place? So you go buy your investment property or you go buy your first
Exactly.
home, and now the furnace breaks down or something happens in that home and you didn't have any money to
Mm-hmm.
cover it, and now it's become a disaster for you. So start building your emergency money up, right? So maybe that's one
Mm-hmm.
month's of living expenses, whatever that might be. Make sure you have some money saved up before you get into that home. That's going to be your foundation. So a
Yep.
prime example would, for me, I kind of overkill it. So I own some investment property, and I have an emergency fund set up for each investment property, 3 months
You have
for each
to.
investment
Yeah.
property.
You
So
never
if I,
know.
you never know. So if I got a tenant or somebody leaves, I know I got a month's covered in
Yep.
addition to an emergency fund I keep for my own home. So we got to get the
Mm-hmm.
foundation in place. The other thing with foundation would be your debts. So do you have a lot of consumer
Mm-hmm.
debts? Do you have really high car payments? Do you have high credit card debt? Getting these consumer
Mm-hmm.
debts under control is going to be huge because one, this is going to help your credit out. It's going to help all these things as you get ready to move into the home, but it also sets your foundation better. Once again, we got to get a strong
Mm-hmm.
foundation so that we can move into the home. So that'd be the second thing. The third thing, once you got your why, you got a good strong why, you got it written out, you got it on your fridge or whatever you do with your why. So what, your vision board, whatever people do,
Bathroom, mirror, whatever. Yeah.
whatever you do, whatever you're doing with it, right? And once you got your budget and kind of your foundation, those
Mm-hmm.
things kind of in place, then the third thing you got to do is you got to fix your credit. That's the third thing you got to do.
Mm-hmm.
Now you got it up. You got it looking real pretty here. You got to say fix your credit. I'm gonna say fix your credit. You need to fix your credit. Is what
Fix
you
your
need to do.
credit. Get it
Um,
down. Fix yo.
fix your credit. Yes. So
Mm-hmm.
we all know this stuff too, in the sense that your credit score and the type of credit profile you have is going to impact the type of deal you can get on your property, whether you're looking for an investment property, whether you're looking for your first home. So a lot of people that just don't know where to start though when it comes to how
Right.
do I fix my credit? What do I look out for? So one of the first things I tell people to do is you got to understand the score. You understand how the score works, then if you understand how that works, then you can fix it. And 65% of your score is just your history of your payments and your balance ratios, how much you owe. That's 65%. So if you attack that 65% with a vengeance, you're going to start putting your score in a much better situation, right? So common mistakes I see people make right before they get ready to buy a home, they'll start getting more credit. They'll start applying for
Mm-hmm.
all this credit, all this stuff. And now the lender is looking at them
Mm-hmm.
and they're like, oh, what's going on here? Why are you applying for all this stuff? What's
Right.
happening? So you got to make yourself
Mm-hmm.
attractive to that lender that you're trying to get this loan from. So you got to make the right moves. Once you know the game, then you can just kind of play the game, right? So first thing I would tell you, if you're not sure where to start, is
Mm-hmm.
go pull your credit report. Confront that monster. Go look Jason Voorhees in the eyes and tell him no
Okay.
more, not today. Go pull the credit. So you can go to annualcreditreport.com. It's a free website you can go pull your credit from and go look at your report. There's usually tons of errors. I'm not even kidding you with this, Dutch. There's tons of errors that are on people's reports that can be cleaned up. That's the first place you want to start is with
Right.
cleaning up this stuff. So you go and you look for, okay, do I have anything that's past 7 years? Do I have anything that's for increase that's past 2 years? Do I have things that's just
Mm-hmm.
bona fide, flat out wrong information, right? Do I have anything messy from a divorce that shouldn't be on my record?
Yes.
Oh, I see that all the time. I'm sure you've seen that
All
probably
the
before,
time.
all the time. And if you just
Foreclosing.
you see it all the time before closing,
Mm-hmm.
that's when you don't want to see it.
Exactly.
Uh, and this is why you want to do this stuff now ahead of time to prepare yourself. So if you're looking at something in the next 6 to 12 months, if you start
Mm-hmm.
taking these steps now, if you start saying, hey, what is my why? What is my budget? What is my situation? Do I have debt that needs to be cleaned up? What's my credit? Oh, let me pull it. Let
Mm-hmm.
me see. Oh, I see there, he has something on my credit that I didn't even know about. And
Mm-hmm.
this is real talk, real talk, real quick, just to switch it here. I
Okay.
like to
Break it
say this
down.
where I've had clients come in and back when I was in banking, and we'd be come in, they'd be looking for a loan or something. I had one couple sit down in front of me, and the husband, we started looking at some stuff for a home equity loan, and
Mm-mm.
we're sitting down looking, I'm pulling stuff we're looking at, and I start saying, looking at the wife, so I'm saying, I see some stuff here. There's like $30,000 here for this, and there's 5,000, and her eyes went, ooh, because she
Like
started
you
looking.
just bust me out.
Yeah, man. She looked at me and then looked at him and then looked at me and then looked back at him, and he started giving me the signals. he started he started giving me those under the table signals, like kicking at my feet. He
Right.
started doing like the don't bring that up, don't bring that up. And she's like, "What is this 30,000? I didn't take out 30,000 in my name. What are you talking about?"
Right.
And I'm being naive. I wasn't catching it. I'm thinking I'm being helpful, like I'm thinking I'm
Right.
helping him catch fraud or something. And he's giving me the no, don't talk. So
Right.
basically what happened was
Mm-hmm.
he was taking out tons of stuff in her name without her knowledge, and she didn't know anything about it.
Mm.
That's why it's so important. Go check
Woo.
your go. That's kind of a side story, but go check your credit. I say all that to simply say, go check your credit. You want to make sure it's cleaned up as best as possible. The biggest impact that you can
Mm.
have on your credit is if you start looking at your utilization. Now, I'm not going to have time to probably get into utilization ratios and all that stuff today because it goes pretty
Mm-hmm.
deep. But the biggest gist of it is that, hey, are you using 30% or more of your available credit, right?
Right.
So if I got, and it actually goes a little deeper than that because it's actually that it not just for your overall credit, it's also for each individual credit that you hold.
Mm-hmm.
So any revolving line of credit, do you have more than 30% that you're using? So if you
Right.
got $10,000 limit, are you using 5,000? Okay, boom, that's like 50%. They're gonna look at that
Mm-hmm.
and be like, right, get out
Right.
of here. So if you start working on that, and man, if I start paying this stuff down to get this below that threshold, that's gonna look way more attractive when you get ready to go look
Exactly.
for that to that lender, right?
Right.
Not to mention, it just makes that a lot more favorable for you for the rates and all those different things that you're going to do. So that's just
Yep.
a
The
couple of just
assistance
really quick things I would
programs.
tell someone to do.
Yep.
Yeah, exactly. Assistance programs, it just makes you way more favorable. I think a
Mm-hmm.
lot of people just don't want to confront it because they're scared to look at it, and
Yeah.
they get this kind of gets daunting, and they're like, okay, I
Mm-hmm.
see it, now what?
Right.
Right now, what do
Yeah.
I do?
Yeah.
But there's light at the end of the tunnel. You can definitely fix this. You can definitely set
Mm-hmm.
yourself up in a position to get your home in the next 6 to 12 months very easily if you just start taking some of these steps.
Yep. So now, if we just go back to the budget part really quick,
Yeah,
because on the budget part, what most times we don't do, whether you're in the house already or before the house, we need to set up parameters. So that being my safety net for expenses or mechanicals that break down. I mean, a furnace is not cheap at all. Your hot water
hmm
heater, taxes are probably going to go up, and just preparing in your mind that these are not going to remain the same numbers for the next 30 years, as things change, and clothing allowances for the kids and for your family. So how would you advise them to structure their budget knowing that these emergencies allowances are needed all the time?
yeah, that's a great question. So what I usually tell people to do is that you have to develop what's called sinking funds. And so when
Hmm.
I set up budgets or help for myself, or whether I set people help people set up budgets, so within their budget, you have to map out every single dollar that comes into your home, right?
Okay.
So no dollar should be unallocated for. So, but what I
Okay.
do is I have different sinking fund. Now, for people that aren't familiar with sinking fund, it essentially is a savings account that you continually put money into to cover expenses. So for example, so in my budget, I have a dog, right? So my
Hmm.
dog had gets a certain amount of money every single month. That's for grooming and for when it needs doggy stuff. I don't
Shots.
know,
Hmm.
doggy stuff,
Yeah.
whatever dogs need, shots, that kind of stuff.
Hmm.
Then I also have a fund for my car insurance because I
Hmm.
pay my car insurance every 6 months. I have
Hmm.
one for my life insurance. I pay that annually. So what I do is I take all of these expenses, regardless of if they're annual expenses, biannual
Monthly.
expenses, whatever they are, unexpected,
Hmm.
unknown expenses, and I divide that by 12, and I actually include that in my budget so that that money is actually flowing to these different sinking fund categories over time. So now,
Hmm.
what happens when I have a sinking fund for car repair? So what happens when I have a issue and I got to go get a car repair? I don't even have to touch my emergency money. Why? Because I've been building up this category called sinking fund of money that's been building up to cover car expenses. So if
Okay.
I just had to put some tires, a new tire on the car. I just went to that sinking fund that gets $100 or whatever a month in it. I just pulled some money out of there. Boom, tires. Here you go. Didn't even
Hmm.
have to touch any of that stuff. So understanding this concept of every dollar has to have a name,
Hmm.
every dollar has to have a home. So any single dollar that comes in, what's your gross expenses, what's your net, right? And then I'm going to start assigning every single dollar a name. So the idea is
Okay.
that when you look at your budget, when you say income minus expenses, it should be zero. It should
Okay.
be zero. And
Oh,
the
wow.
idea being
Okay.
that everything has been accounted for, every dollar has
Okay.
been accounted for. And then I'm
So we
using
have a
these sinking
savings.
funds and these different Exactly.
Okay.
Savings, everything is accounted for. Because that's the
Okay.
problem we run into when it comes to housing. There's a sinking fund for housing, right? So
Mm-hmm.
then if I want to start building up money slowly for house repairs, even if it's something small, because people get discouraged and they're like, well, I can only put $10 away for that. I'm not going to do that. I'd rather go take my $10 and go buy a Big Mac here. So,
Exactly.
no,
Yep.
that $10 is still important, whatever it is, because it's still going to grow, and
Yep.
it helps create the discipline to
Mm-hmm.
save the money, right? So
Yes.
once you have this system set up, I'll be honest, it works so smoothly. Like I've rarely had to even touch my actual emergency fund, just
Okay.
because I'm touching these sinking funds whenever
Nice.
I actually need something. But but that'd be the first thing I'd say. Get your expenses, get your income, give every single dollar home. Your bottom line should equal zero. You should have every dollar should have a name. That includes your debts. That includes your giving. If you're doing giving to the church, all that should be accounted for. And
Mm-hmm.
that's how you get a real picture of how you are you budgeting properly. Because here's the
Yes.
problem people have. They'll go in and like Christmas. Christmas always jacks people up for some reason. I don't know why. Same year, same
Mm-hmm.
day. It doesn't change.
Yep.
But it messes people up. Why? Because they're not accounting for it. Their car
Mm-hmm.
tags entitled. People
Mm-hmm.
get it like, oh man, I got to pay $200, $300 on my car tags. Well, if you had divided that amount out and saved it
Over a
up
year. Yep.
by 12 and saved, exactly.
Yes.
Then when your car title came done, you pull it out of savings and you're done. That
Right.
is in, and I think one of the users on Facebook say discipline, and I agree.
Mm-hmm.
It's about discipline, but it's about also developing a system that helps you with your discipline, right? When it comes to budgeting,
Mm-hmm.
because most people want to think, oh, I just got to have willpower to make a budget work. No, you don't have to have willpower. You put systems in place to make your budget work. Like all my
Mm-hmm.
stuff is automated. I don't sit around here thinking about this stuff. Just get it in
Yes.
place, put it automated. So well, that's a
And I
long
was
answer to a short question. Sorry.
no, but it's necessary because I was just thinking one tip that I had mentioned to someone to help save and prepare for their down payment. For me, I
Mm-hmm.
am an out of sight, out of mind. So if I don't see
Yeah.
it, I'm not going to touch it. So I hardly ever carry cash for that reason. If I
Mm-hmm.
have $5, man, I instantly, for some reason, get hungry or need an ice cream or something.
Oh
So I try not to carry, or Popeyes, side joke, and
yeah.
try
Oh yeah.
to
Right. They mess
carry.
with the they get sometimes.
So I try not to carry cash, but what I mentioned to someone is just like you put away a health savings plan, you put so many dollars
Mm-hmm.
away out of your paycheck every month. You can ask your payroll department, how many accounts can I put money away? Then you can have as
Mm-hmm.
many savings or checking accounts as you need and have an allotted amount for each saving account. So 10% goes to this one, 10 to that one,
Yep.
30 to this one, and let those be your savings plans or your sinking funds, because now you don't see it. It doesn't go into the main checking account. And those are some opportunities so that you can stay disciplined, and then it's a system. And you don't see it, you don't touch it, it's already in the bank. And for me,
Mm-hmm.
you can have it set up at your bank where when you put your debit card in, you don't see the accounts either. Because then if you see, well, I could pull 550 from here and 20 from there, and then I need
Mm-hmm.
to, you know, that's not being disciplined or principled. It goes in there,
No.
stays in there, or put the money aside to pay it off as soon as you get it. So that was just one of those opportunities. Or some people do, like the Dave Ramsey, they do the cash method. So put a bag of cash for this, a bag for that, and whatever works for you. It just
Whatever,
has to be
whatever works for you. I think
continuous.
that's it. Mm-hmm.
Yep. What you can do
Yeah, I
continually
think it's
become a
just it.
habit. Yep. Okay. So then the last point here, so the credit. Now we
But
have
I want
a
to
lot.
go back real quick to. Can I go
Sure.
back real quick to what you were just saying? Because I want to piggyback off of what you were just saying here a little bit.
Okay.
Because I think it's so important for people to understand that your budget or whatever that system thing that you're doing is you have to develop a system or a methodology to make sure you live it. A budget
Mm-hmm.
is nothing if you don't develop a system to live it. And your method that you use to live it, might be different from mine. It might be different from yours. The method doesn't matter as long as
Mhm.
you make it work, right? So I just want to
Exactly.
reiterate that I'm a big fan of automation. So that's what I usually teach people to do as far as
Mhm.
like you were saying, hey, have the money come out automatically, have it automatically diverted to all these different buckets so you don't really have to
Mhm.
touch it and do it. I'm from the
Yep.
hood, so I don't do the cash thing anymore.
Mhm.
But yeah, well, I just wanted to piggyback off of that because I thought that was really good. To if you've tried a budget before, if you tried to save money for down payments and all these things before, and they haven't worked, don't give up on the process. Get a new method
Yeah.
to execute the process, and then
Yep.
work. So
Yeah, in the scenario I had mentioned some time ago, or I'll tell clients, if you know you are long-term saving for a house, instead of that, maybe that latte or what have you, if you can save,
mhm.
it's 4 weeks in a month, typically $75 a week, wherever it comes from, just a lot for that. That gives you $300 a month. By the end of the year, you'll have $3,600. So when you say, well, I can't because I only get paid $10 an hour, whatever the case may be, however you can find that money to save for you, or you make 20 or 30,
Mhm.
it doesn't matter. You find your comfort zone as to what you can save weekly or bi-weekly, or have it pulled out so you don't see it. And some companies actually have that set up where you can have like a savings plan account. So whatever you need to do, then at the end of that 6 months or the end of that year, you have at least a couple of months of payment ready. So the bank will say, oh, very good. You have money saved. You have reserves. Now that's part of you know, eligibility to for some of these loans. So I just wanted to mention that part out. Okay, the last part about the credit.
Definitely.
Need to go back there. So on the credit, when a lot of times they have old errors or old medical, or right now this is student loan time where with it being deferred, that's a big issue. What would you say? Like, is there a certain number of years before that credit no longer impacts their credit score? Because we'll have clients that say, well, I got to pay
Mhm.
everything off. And then they use, I don't know, let's say $3,000. But half of that stuff was 7 years old or 10 years old.
Yeah.
So they paid it off, which is great because now they don't have the debt eventually to pay. But did it move their score? No, not really by much.
Mhm.
So
Yeah.
is there a number or time frame that they need to know how and when to address these issues, and then focus on the ones that are more time sensitive to raise that score higher?
Yeah. No, that's a good question. So typically, when you're looking at items on your credit profile, your credit report, if you see items that are 7 years, it's typically when things should fall off. Now they should, but what I found is that sometimes does not automatically happen, and so
Right.
you want to be monitoring your credit profile and looking at, oh, this is something that's been on for more than 7 years, negative information, and then you can
Mm-hmm.
request to have that information removed. Now, some depending on what it is, it may go longer than that. So if it's like
Mm-hmm.
a bankruptcy, something along those lines, it may go out to 10 years before that can be removed. If you're
Okay.
looking at just inquiries and things like that on your report, where people have been doing hard inquiries and looking at your report where you've been maybe applying for credit, those can
Mm-hmm.
usually come off after 2 years. So
Okay.
but you want to be careful when you're looking at some of these things, because now you're getting into two kind of issues of do I, paying these certain things off versus
Mm-hmm.
letting them fall off and how they're going to impact your credit. Because I've
Mm-hmm.
had people where they've paid off collections and then they were asking later off, like, hey, how come this didn't move my score? Well,
Exactly.
it's not. It wasn't going to
Mm-hmm.
move your score because it was within a certain time frame. So
Right.
I've had that happen, and people paid all this money to get things removed, and then
Mm-hmm.
they were wondering how come it didn't move their score. It's not,
Yeah.
and the score, like people got to understand, the score fluctuates on a regular basis. It's a
Mm-hmm.
moving target, right? So it's one of those things
Mm-hmm.
where you can do some things here today, but you may not see the impact for them until a little bit later on down the road. So that's what I would tell people.
Mm-hmm.
If you got something on there at 7 years, typically you can have that stuff removed. Those inquiries, you can have those removed. If it's something that you're saying, well, I want to go ahead and pay this off, you can definitely still do that. I am a big fan of paying things off. but just know that paying things off won't necessarily move the score. And then you got to be
Exactly.
careful when you're dealing with collections. If you have collections on your account, because when you start, talking to those guys, or if you have certain things where you go and start paying things, it can reactivate certain limitations and things on those. So you just want to be a little careful with those. But I'm definitely not going to tell anybody to morally not pay if they want to pay. But just I think it's better that people have the facts, because I've have seen people pay things and do certain things thinking it was going to instantly impact their score, and that's just not the case.
Right. All right. We lost your visual there, Ephraim. Did you want to
Oh,
log back
it's all
in?
right. I can still see you.
Okay.
I'm still. Can you still hear me?
I can hear you.
Can you still hear me?
I can hear you.
I can
I
try to.
just
Yeah,
can't see you.
I can still see you. Or is my? All right. Let me try something else here. Let me see.
There you are.
All right. I may have to try to log back in. Can you see me again?
Yep. And there you go. All right. Not sure. All right. Okay. hmm Okay. Well, all right. There you go. I'm not sure where you went. You disappeared for a minute and popped back in.
Yeah. Don't know.
Okay. So all kind of things. This
All right.
technology
Am
is
I
something
back now?
else. Yep, you're back. You're live. You're live.
Yeah, man. All right. Awesome.
um, so I think that was good information, because a lot of times they have a misconception that I'll just pay everything off and then it'll magically make my score jump 50 points or 100 points or
Yeah.
whatever is needed. So um, I'll just touch on a few things to kind of give them some guidelines that they can use, and then we'll switch back out. All right. So a couple of pointers that he mentioned. So about your credit, a lot of times clients ask me, well, how do I get down payment assistance? Or my cousin just, they had no down payment. I want that. There are seasons when it comes to lending assistance programs that are funded by the government. So it is not always guaranteed that there's a program available where you can have a $10,000 down payment covered, or 8,000, so forth. There's always a version of a down payment assistance program, so we have to go with what's current right now. There are always different incentives. Like if you're a VA qualified buyer, they have a program right now. Or if you make a certain income bracket, there's uh, a down payment assistance program for that. Ultimately, you just want to be able to qualify for any and everything possible. So, getting that credit score, looking over your report, planning ahead of time, as he mentioned, so you can see, do I need to write letters, or do I need to hire someone as a to review my credit and basically help me get these inquiries off? Or if you don't have time, to get credit help, and then they can fix that for you. Otherwise, if you have the time and you want to write the letters, or you want to dispute and go through those channels, you can. Sometimes the lenders are helpful in telling you, pay this, pay that, and that will get you qualified. So it just depends on your time frame and what you need to have done. Some cases are more severe than others. So as you prepare and plan, and get your savings right, get your credit right, then just keep paying down as much as possible. And as he mentioned, there's kind of thresholds. So 50% is one. Then, when you get down to 30%, that's pretty much better and golden. And even if you get under 30%, but you occasionally use the card to continually show that you're paying on time and establishing good paying habits, that's also looked upon favorably. So when they see that, that reports good history to your account and helps for your score to increase. And I just speak from my own personal experiences as well. So when you do that, now you set yourself up for I have the savings, I have the credit. What can I qualify for? Because now the sky's the limit. So then you shop the lenders to find the best possible lender for you that you feel comfortable with, that will go to bat for you. And that's really important because if you can't find someone who's going to work hard for you and you're just one of the numbers, then it's going to probably not go as favorable as you would like. I do have a select set of resources that I use, and usually they've worked with me long enough to know what's the best resource plan for them, what's the best assistance package. We need to make sure that everything is tidied up before the closing, and we're not stressing out, and the client is not stressing out because they know everything should be taken care of. They have good communication with the lender, and that's very important so that you're not rushing around trying to get last minute details to get your closing done. So, as we work together, or the realtor that you choose, those are important factors. You know, what lenders can you provide, or who do you work with? Let me, talk to them and see, do they jive with your character? Everybody doesn't jive the same, so you have to find the person that works best with you and match with your personality. That's very, very important. Um, so continue to build, save, review the credit, and then you can qualify for 2.3, 2.5, 2.8, 3.5. Get assistance programs where they pay for your down payment, and I work with the sellers to help with the closing costs. So there are many options available, and depending on what you choose, a home that has already been lived in, or you want to choose new construction, some of those programs do vary. So we can discuss those personally depending on what you're looking for. But we wanted to bring Efrem on today so that he can help kind of guide, nurture you in the right direction. Please contact him. So we're going to put his information back up there. So please contact him, visit the website. So that way, for your personal scenario, you can find out what you need to do. Do you have any last parting words there, Efrem?
Yeah, dude. It looks like we got a question that came in here in
Yeah,
the
I see
chat.
here.
Uh, yeah, so is the Vantage score usually what lenders look at? I never know what score to go by. So there's a, just for the sake of time, I won't go too detailed on this, but most lenders will look at the
Hmm.
FICO score. You really want to ask your lender because it depends on what they're going to look at. Now, what you really want to know is
Hmm.
the score the lenders look at is not the same score you look at when you go to Credit Karma or
Credit
whatever. Those are
Karma.
scores for those are scores for educational purposes only. So
Yes,
the
yes.
score you have access to is not the same score that the lenders use, and then there's different scoring models, and so your lender might be looking at something totally different than what you're looking at. So I check with your lender to see what they're looking at, but in general, most mortgage people will look at a FICO score. Now, in my so hopefully that answers that question. But as far as where they can get more information from me, if they go to my website, which is on the screen here, freetoserve.org, if you scroll down on the very first page of the website, there's a link to my private Facebook group. So I would encourage people to join that group. I just recently finished a 30-day credit repair debt reduction challenge with the members of that group. It's all completely free. Gave tons of information about how to actually set up a debt plan, as well as gave out worksheets. I walked through the credit repair process and how to fix things, and also for people that signed up for it, gave out sample dispute letters and all these different things. Pretty much walked people right through
Mhm.
that process. So I would encourage people, if you
Okay.
want to learn more, go join the private group. Those lessons are in the units tab. You can go back and rewatch them, replay them, and get tons of information that way. And I break down the score, Vantage score, all these different scoring models, and go into crazy detail about it. But then you can also just reach out to me at freetoserve.org, or hit me on my email, ejackson at freetoserve.org as well. So appreciate you letting me be on here. So it's been a great time.
Yeah, I definitely love your stories there. They were quite entertaining. So,
I
um,
got a lot of those. So.
I'm sure in that industry. So we thank everyone for visiting with us today. Sorry if there was any technical glitches, but it is what it is with Facebook sometimes. So
Mhm.
we just get through it. The key is replay it, get the nuggets that you need to help you in your scenario. If you need something more personable, reach out to either one of us. Our contact information is on the screen. And we look forward to having more of these to help you guys through and get our people better prepared for
Yeah.
purchasing homes, investment properties, building wealth and generational wealth. So you can have something to pass down to your family, your children, or, you know, maybe somebody else, or help out the community, thinking
Yeah.
of opportunities to buy properties to maybe help for another community service group. So there's many opportunities, commercial and residential. Please reach out to us if you have further questions, and we thank you for your time today.
Yeah.
Bye.